Ladies and gentlemen, good day and welcome to the IIFL Securities Q4 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to the management. Thank you, and over to you.
Good afternoon, friends, and thank you. Thank you for joining the Q4 FY22 analyst call for IIFL Securities. I am R. Venkatraman, Managing Director and co-founder. Along with me are Ronak Gandhi, CFO, and Anup Varghese, who heads investor relationships for the group. I also take this opportunity to wish and hope that all your near dear ones continue to remain safe. The Indian economy was slowly gathering momentum as it came out of the relatively less virulent COVID wave 3. Although there are fears of a wave 4 and wave 5 also on the anvil, we had seen increased activity in equity markets since the beginning of the pandemic, driven by favorable liquidity in both international and domestic markets, higher internet and digital penetration, and increased retail participation. As we speak right now, global uncertainty like Ukraine, Russia, higher inflation, fears of higher interest rates continue to cast a shadow in equity markets, not only in India but across the globe. A quick word on our strategy, which continues to be built on research, prop tech, investment in technology and human resources. We have an edge in capital markets because of a strong research, understanding of capital market, equity, economy, corporate sector, which helps our business line. We continue to scale our efforts for the digital transformation of our retail broking business with the focus on providing customers state-of-the-art digital experience, which is device agnostic. As you are aware, we have 3 revenue streams: retail targeted at mass affluent tech-savvy customers. We offer not only broking with other distribution of products like mutual funds, insurance, PMS, etc., and that is primarily on an open architecture model. Institutional broking, we are one of the leading institutional brokers domestically, and we are the port of first call for many domestic and foreign institutions, based upon our execution capabilities and research credentials. And last but not the least is investment banking. We are focused on equity capital markets, which is IT and QIB, and where we have unique capability of filling all the buckets of the IPO construct, be it retail, wholesale, or institutional on its own distribution strength. Coming to the quarterly results of March 31, 2022, consolidated revenues was 362 crores, up 41% YoY and down 2% quarter-on-quarter. Increase in revenue on a year-on-year basis is primarily because of growth in brokerage income, 156 crores against 124 crores on a year-on-year basis. Investment banking grew to 66 crores versus 36 crores, and product distribution income was 56 crores versus 27 crores. Coming to on a quarter-on-quarter basis number, brokerage increase was on a quarter-on-quarter meager at 8%, 156 against 145. Investment banking increased again sharply, 66 against 32, and FI and distribution income was virtually flat at 56 crores for both the 2 quarters. Other income was down quarter-on-quarter to 15 crores, primarily because the previous quarter we had other income because of sale of our investment in this card. Full year numbers for your quick reference. Our total income grew 52%, primarily because of 36% growth in brokerage income, 574 versus 423. Investment banking almost doubled, 150 against 73, and distribution income again rose 73%, 211 versus 122. And our PAT as a result grew 38%, which is 305 crores versus 222 crores. Coming to expenses, we have seen a growth in expenses primarily because of employee cost increases, both in terms of number and people, as well as variable pay, increase in variable pay and investment and sub-broker payouts, and also investments in technology as well as marketing for higher customer acquisition. So finance cost was down 53% on quarter-on-quarter basis, primarily because of decrease in IPO funding activity, and it has increased year-on-year simply because we have borrowed more for margin funding. Admin cost is up 10% quarter-on-quarter, 63% year-on-year, as I explained, because of increase in sub-broker payout, increase in technology expenses, lead generation, and marketing costs. Coming to the big other headline number, assets under management and custody 1,30,000 crores. Average daily turnover for the quarter was 1,11,535 BSP and NSE combined, which was 1,884 crores for cash and 1,09,651 crores for derivatives. Corresponding figures for the previous quarter was 83,554, which was 1,835 in cash and 81,709 for derivatives. Our technology investments we have spoken about, IIFL Markets app and AAA, which are used by both our RMs, customers, and for unlimited service. We have invested a lot in DIY account opening journey. 63% of our accounts are opened digitally. Large number of accounts are opened under non-EQA DIS structure, and customer acquisition efforts are yielding results. We have acquired over 2 lakh customers, 2,08,000 for the last quarter. With this, I come to the end of my talk, and we will be more than happy and glad to answer any questions that you have. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead. Mr. Vivek, please go ahead with your question. Your line is unmuted.
Sorry, I was on mute. Mr. Venkatraman, congratulations on good performance. You had spoken about margin funding. I just want to know what percentage of your customers avail of margin funding, what are the volumes which are there typically, and how important is it when you acquire customers that do they automatically ask for margin funding? So I just wanted to understand that part of the business. Thank you.
So if you look at our broker margin funding, I think which is MTF, which is about 535 crores, right? Gross book is about 538 crores. And so effectively what has happened is that we have tried to make the entire margin trading fund journey user friendly. So we have now launched a BNPL buy now pay later, which the millennial understand because most of them are buying on various e-commerce websites. And we believe that margin funding is a good tool to have to engage with customers, and also it helps in customer taking positions, especially in the cash segment.
Okay, but
the percentage of customers who avail of margin funding, I don't have it right now, but I'll get this data and get back to you.
No, that's great. Thank you. And so then the key thing would be the only collateral you'll have is the stock, right? If the customer defaults, and so
yes. So as per RBI guidance, 50% is loan to value and the stock is collateral.
Okay, excellent. Thank you very much. That's all I wanted to know. Thanks a lot. Good luck.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. Anyone who wishes to ask a question may press star and 1. The next question is from the line of Mudita Nahar from Abacus Asset Management. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, how much would be the yield on the margin book?
See, the yield on the margin book is roughly about 14-15%.
Okay. And sir, what would be the mix between the retail brokerage and the institutional brokerage, sir? In the
Retail brokerage and institutional brokerage roughly about 50-50. I think it's 48-52. It moves on quarter to quarter, but I think broadly you can take 50-50.
And then are there any impact on the yield front in the brokerage side?
Brokerage yield has actually, it has been continuously trending downward. So it is, as of now, it is about cash is about 7 paisa, and derivatives will be about 0.09. So it's quite low. And it has been virtually unchanged for the last 2 quarters.
Okay, so that's it from my side, sir. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. The next question is from the line of Kartik Sahni from IIFL Asset Management. Please go ahead.
Hi, sir. My question is around your major tie-ups that you have done. And I see that for this quarter, you added about 2 million clients. So I just want to know what percentage of those clients were added through these tie-ups.
No, sorry. I'll correct one figure because the total number of clients we acquired in last quarter is 2 lakh, not 2 million. I would have been very delighted if I had acquired 2 million customers. And so coming to the tie-ups, I think the reason we have these tie-ups are not helping us to acquire customers, but to be very honest, they are more at giving a more holistic and superior digital experience to the customers. So I cannot say whether the customers are coming because of these tie-ups. I think these tie-ups are forced joining us so that they engage with us more and spend more time with us.
All right. Thank you.
Thank you. The next question is from the line of Nagesh Rajana from NR's Family Office. Please go ahead.
Yeah, hi, very good afternoon, and very happy to see the top line growth, but however, equally concerned with equally aggressive expenses growth. Now, the question is, how do we see the future as we go forward to the next couple of quarters? Do you see the expenses growing, in line with the revenue growth, or, could there be any changes?
See, actually, to be very honest, the question you have raised is very correct because what has happened for us last year is that we saw an increase in manpower. The number because my employee cost went up because both in terms of actual headcount gain, because the headcount went up from roughly 1,928 to 2,529. Then we also had to take wage inflation because actually we saw employee cost going up, and also we had an increased employee variable pay payout because we had a good year. Then we also saw some increased expenses because of marketing and technology. Marketing was primarily because lead generation marketing costs went up because we invested to acquire a large number of customers. Admin costs went up because of higher sub-brokerage payouts, and technology already spoke about. So I hope that in the days to come, we should see revenue growing at faster pace than expenses.
Thank you. Looking forward to the revenue growth ahead of expenses in the coming quarters. Thank you.
Thank you so much.
Thank you. Reminder to participants, to ask a question, you may press star and 1 now. Anyone who wishes to ask a question may press star and 1. The next question is from the line of Pranay Zaveri from J&J Holdings Private Limited. Please go ahead.
Good afternoon, sir. Thank you for this opportunity. If you can just throw some light on the real estate portion and the progress on that. Thank you.
See, if you look at our real estate situation, I'll just give you the latest position. We have about 6,23,000 of office space, which is spread across Ahmedabad, Andheri. Even in Andheri, we have in Andheri, Chandivali, Dadar, We have an office in Pune, we have an office in Thane, Gurgaon, Hyderabad, Chennai, etc. So if you look at the total space, I think rental income, we are generating rental income from it. Roughly about it's about 30% from outsiders and 70% is consumed in-house. So we are carrying it at a book of about 243 crores. We expect the market value to be higher, but it's very difficult for me to give a figure on it. So we have been making efforts to sell. So in the last 2-3 quarters, we didn't have any success. And the last sale it was in last quarter in April, May, June quarter. So we are continuing our efforts to sell some of the property, and we hope that we should see some results. But unless the deal is done, it's very difficult to say. But yes, our aim is to sell.
Sorry, I didn't get that figure. Did you say what is the approximate market value, and out of that, what is the aim? What percentage would get sold off maybe another 2-3 years?
See, in 2-3 years, apart from Mumbai office, we look to sell everything else. No, sorry, Mumbai and Delhi office, we look to sell everything else.
And what is the approximate value that you have?
See, actually, they are carrying a book value. I can tell you it's about 243 crores. Some time ago, when we did an external agency, it was roughly about 670 crores. 600 crores.
Out of the 650 crore, if you exclude Mumbai and Delhi, what would be the saleable portion?
It's difficult to say. Chennai is a big property because Chennai is about 250,000 square feet. So I don't have the number right now in front of me. But.
Okay, sir. Thank you.
So one thing, can you send me an email so that we'll try to contact you with some approximations?
Yes, sir. Thanks.
Thank you so much.
Thank you. The next question is from the line of Sumit Jankar from Motilal Oswal Financial Services. Please go ahead.
Thank you for providing me the opportunity. Sir, I gone through the numbers of active clients. So last year it was around 3 lakh, and now it has been around 11 lakh. So, and if you go through the total number of addition in total clients, so as compared to that, the active client has shown a good growth. So what helped in making that clients active?
What has happened is that if you see, there are 2-3 reasons for this. One is we were obviously benefited from the buoyant capital market. Second thing is that we had a large set of dormant customers whom we tried to activate using a call and trade facility. So we had a call center agent trying to reach out. We also try to nudge them digitally. We also to make sure that we activate them. We also leverage on the IPOs to make them active. So I think it's a combination of all these things, and plus which helps them to make them active.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hi, sir. So my first question is any outlook on customer acquisition? So like how many do we plan to acquire for FY23?
See, we don't have a target like this, but what has happened is that we'll play it by the year. So hopefully we should be in the 150 to 2 lakh per quarter number.
Okay, so we should continue the current acquisition you are saying, right?
Yes.
Okay.
But obviously as market conditions change, we will also change our target number.
Okay, and what revenue growth are we seeing for this year since we are also increasing our manpower and all?
See, it's very difficult to give a figure on revenue growth. So I don't want to hazard a guess.
Okay, no problem. That's it, sir.
Thank you so much.
Thank you. The next question is from the line of Kartik Sahni from IIFL Asset Management. Please go ahead.
Hi, sir. My question is on your tie-up with Concall. So that gives access to around 3,500 US stocks. Can you share the pricing of this?
Sorry, I don't have. It is like basically helping Indian customers to trade in overseas stocks. So we don't have a standard pricing structure. I don't remember it offhand. So I'll get it for you. You are interested in what brokerage we charge, right?
Yeah, exactly.
Yeah, I'll get it, please.
Okay. Thank you.
Thank you. Participants, to ask a question, please press star and 1. Anyone who wishes to ask a question may press star and 1 now. Participants, you may press star and 1 to ask a question.
If there are no further questions, we'll come to the end of this call, and I thank the participants for their questions. And our IR at IIFL.com. Investor.relations@IIFL.com is the email. And if you have any questions, please feel free to ask so that we can address all those questions. Thank you so much.
Thank you. On behalf of IIFL Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.